So good morning, guys. వాయిస్ స్లో వస్తుందా? స్లోగానే వస్తుంది కదా? Yeah. Guys, please respond. What about the voice clarity and video quality? It's okay. In a previous class, we discussed the topic name called common size statement analysis, right? It's okay. When it comes to common size statement analysis, so it shows each item on the income statement and balance sheet as a percentage of total sales or total assets. That's you need to ask. Okay. So when it comes to, it shows each item on the income statement and balance sheet as a percentage of total sales and total assets or total liability. So here total assets and total liability are not different, they both are same. When you're doing a common size statement analysis under balance sheet, you can take base either total assets value or a total liability value. Why? Because both are same answers. Okay, done. When it comes to second point, it helps in understanding the cost structure and profitability, efficiency and usage. When it comes to income statement point of view, we can understand how much cost we are incurring. That is nothing but cost structure. How much profit I will receive if I sold some X of rupees of sales. Now when it comes to efficiency and usage can be learned through balance sheet. Now when it comes to the point 3, useful for company comparing companies of different sizes. Previous class problem is talk about different size problem. One is 20 lakh sales, another one is 7 lakhs sales, I think. Are you clear? 9 lakhs. Okay. Size point of view, company A is a bigger company, company B is a small company. Not nature point of view, values point of view. When it comes to, and also you can compare one company over a different period. One company over a different periods. Company A 2020, 24, 25, 25, 26, 23, 24. Guys, clear? Get done. So I think we made a one solution and comments is there. Let us check what they given. So we recorded based on our knowledge and our analysis in detailingly, but I think they not give that much of clarity about the analysis. They provided only their perspective. Now when it comes to illustration number 11, right? So you can understand the comments what they given. A Limited has a better and efficient credit and collection system because it debtors and trade stock amount 31.9% of the total assets as a compared to 39% in case of a B Limited. This point we touched. I think there is a changes only in stocks and cash point of view. 7 times, 3 times. Okay. Next, the cash position. Yeah, the cash position of B Limited 7% of total assets compare favorably with that of A Limited 2.7% of the total assets. I already said if you have a high assets percentage, it shows a favorability. If liability shows a high, it shows a unfavorable. If current assets if assets are shown less values, it shows unfavorable. High value favorable. Liability vice versa, opposite. Guys, clear? Done. Now when it comes to point number C, the turnover of A Limited is large than the B Limited, but the cost of goods sold observe a large, that is 56% of the net sales as compared to 49% in case of B Limited. This reflects a better pricing markup by a B Limited. The word here pricing markup is nothing but a profit. Guys, clear? This point also we touched. We completed more than the individuality. So here they consider totally. We specified total individually as well as total comment. Next, the selling and admin expenses are 35.6% of net sales in case of A Limited, while 38% in case of B Limited. Administrative cost in a B Limited is higher as compared to the A Limited, indicating a high paid overstaffed administrative function followed by a B Limited. This point also we touched. Next, A Limited appear to more traditionally financed with the shareholders' equity, 65.6% of total liabilities as against 50% in case of B Limited. This indicates the contractual obligation of B Limited is higher than that A Limited. Are you clear? Why? Because in A Limited, 65% we are procuring through equity. When it comes to B Limited, they are procuring 50% only. Yes or no, sir? There is a preferring more than the debt comparing to A Limited. Next, the fixed assets of A Limited is larger, 12,70,000 than that B Limited, 5,13,000. But if it is a compared with the turnover, we find that A Limited is a higher fixed asset turnover than the B Limited. This reflects the better asset utilization by A B Limited. This point also we recorded. Guys, clear? Okay, done. The next concept, guys. The next concept, don't write, just understand. The next concept name is called comparative statement analysis. The name itself, we have a clue. Comparative statement analysis. We are comparing with the previous year or next year. That's a very, very important point. We are comparing, we are at current, we are comparing with our past results. We are creating future results. Guys, hope you understand. We are at present, we are using the past information, we are estimating the future. That's a happening in valuation. Now, I'm not talking about the future, I'm just talking about the analysis. Analysis talks about today. So how I analysis means with the help of comparison. The name itself saying comparative statement analysis. How I compare means I will compare with my actual results of this year from to previous year information. So it means in comparative statement analysis they will give 2 years information, current year information and previous year information. Now you have to find out the how much values are increasing or decreasing. How much values are increasing or decreasing. For example, last year sales 10 lakh, this year sales 12 lakhs. What happened? Comparison. 2 lakh sales are increases. Last year cost of goods sold 8 lakhs, this year cost of goods sold 7.5 lakhs. Decreased. Comparison point of view, I understand. Comparing to last year, this year cost of goods sold decreases by 20,000, 50,000. Hope you guys clear? Same for liability also. Last year equity share equity, no, not here, over the assets. Last year assets value 100 lakhs. This year assets value 120 lakhs. What happened? 20 lakhs increases. Last year current assets, total current assets 5 lakh. This year total current assets 3.5 lakhs. Decreases. Now you have to write particulars of all names and current year or previous year, current year, no issue. But you have to comparison between previous to current or current to previous. Current to previous. Don't use the previous to current. Current year value to previous year value. Are you clear? Next, you have to write on the one column, create a new column name called increase or decreasing amount. Increase or decrease amount. Okay. The amount can't express proper decision tool. That's why we are converting into percentage. We are converting into percentage. We are creating another column name called percentage change. Percentage change. Now change represent new minus old. The change represent new minus old. Percentage change represent new minus old divided by old into 100. Guys, clear? This is a clue. So good peteskondi. When you are doing a comparison of a change, difference rule is new minus old. Percentage of difference is known as new minus old divided by old into 100. Are you clear? Current year is a new, previous year is a old. Guys, clear? That's about the comparative statement analysis. Now let us check the points regarding to the comparative statement analysis. See the concept comparative income statement analysis. present income statement or balance sheet of two or more periods side by side. Previous year balance sheet, this year balance sheet, or previous year income statement, this year income statement. Okay, done. It shows a both absolute change and percentage change between periods. What does that mean for absolute change? The word absolute change represents numerical change, rupees change, and also percentage change. How you get a percentage change? So current year value minus previous year value divided by previous year into 100. How we get absolute change? Current year value minus previous year value. Are clear? Now let us check the third point. It helps in analyzing growth as well as decline in income and expenses over time. Not only income and expenses but also assets and liabilities. Assets and liabilities. Now when it comes to presentation, preparation of comparative statement analysis, particulars, current year, previous year, increase or decrease in value, decrease in amount, percentage of increase or decrease, percentage of increase or decreasing in value, in amounts. So this is the format for comparative statement analysis. The current year means current year amounts, previous year means previous year amounts. Particular means if it's an income statement, it start from sales, end at PAT. If it is a balance sheet, it starts from either liability side point of view or asset side point of view. Guys, clear? Don't change the format, not this format. Don't change what the information they given. Please dump that entire information line by line. Are you okay? Now what's the illustration number? I think illustration number 10. Illustration number 10. Illustration number 10. Illustration number 10. So here you have to write the comment, not comparison between the two companies. Here the comparison between two periods income statement or two periods balance sheet. You have to write the every comment comparing to last year. Comparing to last year, this year either increase or decrease. Guys, clear? Now I think there is a no income statement. That's why framed only for balance sheet. So if it is an income statement is given, same format. Instead of assets and liabilities, you are using expenses and incomes. Are you clear? Now done. What's the problem number 10? Huh? Problem number 10. Statement showing comparative statement analysis of company name is given of Maharaj Limited, Maharaj Limited for a period of what and what? 12. I want assessment year and previous year. Assessment year 23. Sorry. So which one is assessment year? 12-13. Yeah. Current year. 12-13 and 11-12. 11-12. Twelve 13, 11 12, increase or decrease of amount, percentage of increase or decrease of amount. Now please tell me what's the first element? Cash and bank. What about the 12-13? 12-13. 20,000. 2,000. 11-12. 23,600. What about the increase or decrease of amount? Current year versus previous year versus current year. Current year. So 2000 versus 23,600. What happened? Decreases, sir? Minus. How much? 21,600. Now what about the percentage increase or decreasing of amount? I think negative only. Decreased. How much? 91.5%. Comparing to last year, this year cash and bank balance reduced by 91.5%. What is the reason for reduce? Either payment to current liabilities or either payment to capital assets. If assets are increases, the common sense they paid with cash. If current liabilities are decreases, common sense they paid with cash. If any liability, debentures or equity share capital, not equity share capital, maximum equity share capital we are not repay. The only the chance is buyback. Remaining all capitals is there now. Bank loan, debenture, redeemable debenture, redeemable preference share capital. If they reduces means common sense were repaid or redemption. Guys, clear? Get done. What's the next one? Debtors. Current year 38,000. Okay. 41,800. What about the increase or decrease amount? Decreased 3,800. Percentage 9.1%. What is the reason for decrease? Two things. Either not collecting or we are not done new credit sales. Credits collection when it complete, when it happens. If you done a credit sales only, na? Yes, sir, decreasing. You are not doing a credit sales. Yeah, you are not doing a credit sales. There is a no collection. If you are done a credit sale, but debtor will not paid, customer is not paid payment within the time. They are not paid. Debtors will be reduced. Bad debts is there. So what happened? Debtors value decreases. Clear? If income statement given at that income statement, if you observe the bad debt, the reason is bad debt. Guys, clear? If there is a no bad debt information, the reason is we are not doing a credit sales. Guys, clear? Done. When it come to next one, what's the next one? Inventory. Answers? 26,000, 32,000. Change? Negative. What about the percentage increase or decrease of amount? 18.75%. So inventory reduces. Inventory reduces. What's the reason? What is the reason? Either usage, that is nothing but production, or we are not maintaining proper stock. Guys, clear? So first reason is, if there is a no demand, if there is a no demand in the product, automatically we will not use that much of stock. Guys, clear? So if you not use that much of stock, last year I used 26,000. This year, last year I used 32,000 valued stock. This year, just 26,000 stock. Why? Because there is a no demand in the market for a product. If I have a product, I will use a more stock for manufacturing. Guys, clear? Done. What next? Other current assets. Current year 2,600. What about the previous year? 6,400. Now what's the difference? 3,800 negative. Percentage increase or decrease? 50. 3738. So I hope you guys you understand how to write the comment. So if you decreases means you have to figure out the why decreases. If it increases means you have to figure out why it increases. Now when it comes to the next element, total current assets. Total current assets. Yeah, write down. Total current assets is also a requirement. Total current assets 60, 8,600. Don't change the format. Go with the every element. Now what about the previous year? What's up? 1,03,800. 35,800 decreases. Why it decreases means because of above reasons. 35,200. So why total current assets decreases comparing to last year means because of above all reasons. Because of decreasing in debtors, because of decreasing inventory, because of decreasing in other current assets. Guys, clear? How much percentage, sir? 33.91%. What is the next element? So fixed assets. Land and building. Please tell me the current amount. 34,000. What about the previous year? 54,000. Now what about the change? 20,000 increase or decrease? Now what is the percentage? 37.08%. What is the reason behind the decreasing in land and building? Sale. land and building. So assets is sold. Are you clear? So you can compare depreciation not more than 20%. For example, it's not plant and machinery. Depreciation is not more than 20%. But how much here decreases? 37.8%, 0.8%. I'm assuming it is a plant and machinery. Remove the word land and building, put the word plant and machinery. Are you clear? So the reason is depreciation, sale. Are you clear? Why? Because depreciation not more than the 20 to 25%. But how much change happened? 37.08%. Guys, clear? Done. What about the next one? Plant and machinery. Current year, please. 1,57,200. What about the previous year? 62,000. Huh? Okay, done. What's the change? 95,000. What? Increase or decrease? Increase. I already said na. If cash balance is decreases means we are used for either purchase of the investments, purchase of assets, or payment of liabilities. Now how much percentage? 1.54%. Comparing to last year, our assets value increased, our plant and machinery increases by 153.54%. It means we purchased more plant and machinery comparing to last year. If last year machinery we purchased only for 100 rupees, this year we are purchasing for 150.54 rupees. Guys, clear? Done. What next? Furniture. Value, please. 9,600. What about this? 5,800. 3,000. Positive. Now what's the percentage change? What's it? 65.51%. So comparing to last year, this year furniture value will increased by 65.51%. So you can use the word new office setup. New office setup. This much increases means automatically either you will replace that old furniture, or you can inbuilt in your new office. Sir, take another room. I said office. Same building, extra room. Are you clear? So purely depends upon the analysis. You have to link it to above things. Are you clear? Now what's the next one? What's it? Total fixed assets. నేను డీటెయిలింగ్ చెప్తున్నాను కాబట్టి ప్రతిదీ మాట్లాడుకుంటున్నాం. మనం డెసిషన్ డీటెయిల్ మీద రాయం, టోటల్స్ మీద రాసేస్తాం. ఓకే, కూల్. సో టోటల్ ఫిక్స్డ్ అసెట్స్ ఎక్కడైనా మనకి ఎక్కువ అమౌంట్ ట్రాన్సాక్షన్ జరిగి ఉంటే అప్పుడు ఇండివిజువల్ మీద ఫోకస్ చేస్తాం. సో ప్లీజ్ టెల్ మీ అబౌట్ ది టోటల్ ఫిక్స్డ్ అసెట్స్. 2,08,000. 2,08,000. Now what about the previous year? 21,800. Change? 79,000. Percentage of change? 64.86% increase. Next, please, liabilities. Long-term investments is there. Long-term investments. Values, please. 11,800. 9,200. 2,000. If you observe, my cash increases only by my cash decreases only for 21,600 rupees. 21,600 rupees. But my assets increased value is more than the 21,600. How about the remaining cash? In liability also we will realize the cash. If you procure means our bank balance will be increase. Now long-term investments please, percentage 28.26 increase. Okay. Next, total assets. Total assets. Values please. 2,81,200. Previous year 34,800. Change please. 46,000. So comparing to last year, my asset side balance sheet affected by 46,400 rupees. I have to figure out the reasons for why that 46,400 affected. Now please tell me the percentage format. What's it? 19.76% impacted. Totally. So on the total, there is a three things is there. Current assets is there, fixed assets is there, investments is there. Are you clear now? Done. What next? Liabilities, huh? So please tell me about the liabilities. Speed up. Current liabilities total, just a heading. Okay. Current liability, please. What ma? 25,000, huh? 25,400. 52,400. What, sir? 20 percentage, please. 51.52%. Comparing to last year, we are settling current liabilities by 52%. So last year, if I settle only 100 rupees, this year I am settling. This year I am settling 150%. Yes or no? No. Okay, done. What about next one? Long-term debt. Amount, please. 65,000. 40,000. Increase 15,000. 25,000. Percentage, please. 62 point. What's the mean for increasing 62.5% of long-term debt? We have procured 25,000 extra comparing to last year. My cash balance increased by 25,000. Yes or no, sir? Next. Owner's equity. On that, okay. Equity share capital, please. 1,20,000. 80,000. Increase or decrease? 40,000. Huh? What is the percentage change? 33. Exactly 33%. 50%. Huh? Now what happened about what is the mean for 50% increase equity share capital? We issued a new shares. We issued a new shares. We are procuring capital from the equity sources. Now next, reserves and surpluses. $70,800. 60. Okay, done. Increase or decrease? How much? 8,200. Company perform well. The profits are included. 8,400. Now change. Increase, huh? 13.46%. So company performs well. Can I use that word? Company performs well. Okay. Why? Because we have a profitability. What next? Total owner's equity. Yeah? Okay, done. Total owner's equity. Values please. 1,90,800. 1,42,400. 48,400. 33.98%. Next, total liabilities. Please the values. 2,81,200. 34,800. Change. 46,400. Percentage. 19.76%. If you compare with the total assets, 19.76%. Current liability, total liability also 19 point. If this effect is not same, your balances will be not equal. Very clear? If liability effect is not same as asset effect, your total assets value is different, total liability value is different. But as per balance sheet, both values are equal. Guys, clear? Huh? Now liability impacted by 19.76%, assets also impacted by 19.76%. You have to comment on that. Why their assets why impacted 19.76%, liability why 19.76%. Are you clear? So okay, done. Let's check the comment what they given. The current assets of Maharaj Limited have decreased by 35,200 in the year 12-13 over the 11-12, where current liabilities have decreased by 27,000 only, but it has a no adverse effect on the short-term liquidity on current ratio because current assets have decreased by 33.9% and current liabilities have decreased by 51.5%. So current assets are decreases as well as current liability also decreases. Very clear? So current liability decreases by more than the current assets. Hope you understand. That's why automatically your ideal ratio need to be maintained 1.5 times. Example, there is an ideal ratio for current ratio. Every company need to follow 1.5 times. It means if your company have a 1 rupee of liability, you have to maintain 1.5 of current assets. Are you clear? If current asset decreases, automatically this ratio, this ideal also be decreases. Yes or no, sir? If numerator decreases, before answer also equal before answer also decreases. Now, but my answer is not that much of decrease. Why? Because current liability also decreases. That a decrease is more than the current asset or less than the current asset? More than the current asset. That's why my ideal ratio will not affect. Guys, clear? Okay. Now simple, guys. Current assets 1.5 lakhs. Current liability 1 lakh. Now what is the current ratio? 1.5 times current assets divided by current liability. Now what happened in the balance sheet? Current asset decreased by current assets. Current assets decreases by how much percentage? 59.4%. Now please reduce on that 1.5 lakhs. How much, sir? Now what is the new current asset value? If decreases by 59.4%. 60,900. Now please tell me about the current liability. Increase or decrease? Decrease. How much percentage? 51 point is ఉంది కదా నాన్న మనం చేసిన దాంట్లోనే 51.52%. 51.52%. You in 1 lakh, if you reduce the 51.52 lakhs, what is the answer? 48,480. Now please calculate current ratio for this answer. 1 point. When problem means if your current ratio is less than 1. If current asset is less than 1, how much we have? For 1 rupee of current liability, have a 1.25 rupees of current assets. That is the meaning of 1.25 times. Guys, clear? Clear? Okay, done. The cash at bank have decreased by 91.5%. It implies an adverse cash position of the company. The company may face a problem in meeting its what, sir? Short-term obligations. So decreasing cash is not that much of good for a company, not a good for the company. Are you clear? Why? Because if creditor came and asked the money, how you settle? Yes or no, sir? Okay, done. Next, the long-term debt of a company has increased by 62.5%, where it is a bonus equity has improved by 34% only. Observe how they compare. Long-term debt increased by 62.5%, equity increased by 34%. It means they rely on outsiders. They rely on outsiders comparing to the equity within the company owners. Now see, it implies that financial risk. Are you agree for this? If debt is came to your company, automatically you are facing a risk name called financial risk. Now, in terms of dependency of an outsiders and the term of contractual obligation associated with the company has been increased significantly during the period under study. Guys, clear? We discussed that point also. Now when it comes to point D, there is a substantial increase in the fixed assets by the company. The fixed assets have increased by 79,000, that is nothing but 64.9%. This mainly due to significant increase in the plant and machinery of the company. The plant and machinery have increased by 95,200, that is nothing but 153.5%. It indicates a remarkable improvement in the production capacity of the company during the study period. Such cost of asset has financed by the proprietors fund, long term raised fund. It indicates the long term stability of the business. In one sentence they explained entire thing. They touched the point called total assets. Total assets increases because of plant and machinery. The main significant change, large change happening in plant and machinery. So if you are putting that much of amount in plant and machinery means you are doing a massive production. Guys, clear? So you are improving your capacity, production capacity. Very clear. Now the second point, how where you get that much of money for purchasing the plant and machinery means because of I raised from equity share capital and long term debt. Guys, clear? So this is the points you have to mention mainly. Guys, clear? So when it come to the comment, go and touch the point current assets what happened, current liability what happened. Always you have to write comparison between current asset and current liability. Are you guys clear? Next, if you have any significant, the word significant means large, impacting transaction, if any is there, you can write the individual sentence. So next you have to compare with the total assets. Are you clear? What happening in the assets point of view, and also you can touch the total assets versus total liability. Guys, clear? So this is a concept name called what, sir? Comparative statement analysis. So up to now, are you okay? Common size and comparative statement. Why? Because we don't have a more number of problems. We have just a concept as well as one problem. Next, the next concept name is called trend analysis. The next concept name is called what, so? Trend analysis. The next concept name is called trend analysis. So just I will give a overview regarding the trend analysis, then you can write the points also. So okay, done. When it comes to trend analysis, you already know trend means patterns. So here we are not comparing with the only last year. Here we are comparing with the last years. That's a simple thing. Last years. What's the mean for last years? We will take the 4 to 5 years of information. We will check what happening in the previous years. Very clear. If you want to check that previous year information out of past information, you have to consider 1 year is a base. 1 year is a base. For example, I have a last 5 years information. It means 2020, 2021, 2022, 2023, 2024. Out of 5 years, that I will treat 2020 is a base year. Very clear, sir? For every values of 21, 22, 23, 24, I will use a base, this one. If you want a percentage, you need one numerator, one denominator, right? For all denominators, I will use this first year information. Very clear? So students will confuse in trend analysis and common size statement. In common size statement, we are using base. We are using base. Here we are using base year. Understand the difference? Base means income statement point of view, total sales is a base, or net sales is a base. Common size point of view. Balance sheet, common size statement preparation, assets are liability at the base. But when it comes to the trend analysis, for example, if you take income statement, sales, cost of goods sold, and next what gross profit, right? So if you take first year is a base, means for all sales you have to divide it with that base year sale. For all cost of goods sold, don't divide with the sales, base year cost of goods sold, base year gross profit to remaining all years. That is the difference between common size and trend analysis. Now how to calculate trend means current year divided by base year into 100. Current year divided by base year into 100. Guys, clear? So this is about trend analysis. By using that, we can easily draw a graph. What happening? How they are fluctuating. So we can assess they are constantly moving or not constantly moving. That kind of patterns we can find out with help of trend analysis. Are you okay, sir? So these problems are not there in your material, sir. I procured from the CMA and the concepts only you have in your board material. Now, okay. So let us check the trend analysis points. Trend analysis is a technique used to analyze the direction and pattern of financial figures over a multiple years. Pattern. Now it helps us understand, is a business growing or declining? If your graph is uptrend, what it means? Increasing. If your graph is downtrend, pattern is nothing but trend. Guys, clear? Now it helps us to understand which item are increasing faster than others. They are expressing in total point of view. We can express growing or declining, as well as you can express decision based on individuality. So how you decide the individuality means which element is growing faster than all elements. Okay, done. Next, choose a base year. The base year must be what, sir? The base year must be first year. If you have a 10 years information, the first year is known as a base year, not last year, not middle years. So if you take a last year, we can't predict the past trend. So the trend equals to current year value divided by base year value into 100. Write down the points. Gopi Raju, today they will dispatch, man. All materials are done. 3 modules. One is concept book and workbook, and the third module is MCQs and case study. They're also completed. I think today onwards they will share the materials. Yes, completed. Huh? Okay. Now illustration number 13. 14. 12. Yeah, 12. Illustration number 12. Calculate the trend percentage from the following figures of Rahul Limited, taking a 2008 as the base year and interrupt. Even though they're not specifying about the 2018, I will consider 2000 or 2000 not 18. Even though they're not considering 2008, I will pick 2008 as a base year. Why? Because it is a first year or starting year. Are you clear? Now simple. So they provide only three things: sales, revenue, inventories. So sales, inventory, EBT. So you can get a full income statement also sometimes. Are you clear? So now you can get a some full balance sheet also sometimes. Now if you decide this as a what? If you decide this is a base year, the common sense all answer shows what? 100%, 100%, 100%. Why? Because base year divided by current year divided by base year, both are same, right? Are you okay? Now when it come to here, current year 2450 divided by base year 1992 into 100, 122.9%. Base numerator 2765, denominator 1992. Current year 2765 divided by base year. What is the base year? 2018 sale value 1992 into 100. Answer? What, sir? 138.80. So here we are not doing a percentage change, sir. Here we are doing a trend change. Percentage change means new value minus old value divided by old value into 100. That happening in comparative statement analysis. Here I am not doing comparative statement analysis. Here I am doing trend analysis. Are you guys clear? Huh? That's why you have to take current year total value divided by base year total value, not differences. Now what about the 2011? 157.17%. 190? 67. So there is a famous dialogue in not ready. T. Brahmanandam saying that, sir, Miru Dinadina Abruddhi Chendutunnaru, sir. So that's a comment about this. So they are every year increasing their sales. They're creating demand in the market. Creating market in the demand. Are you clear, sir? So with help, can I use the word with the help of advertisement? Yes or no, sir? With help of advertisement, they are creating demand in the market. Or artificial market also creates sometimes. అర్థమైందా? కొన్నిసార్లు మనకే తెలియకుండా మన ప్రోడక్ట్ డిమాండ్ క్రియేట్ అవుతుంటుంది. It's called luck. So no businessman they can't do business on luck basis. They have their own strategy and planning. So with help of planning, how they are increasing their sales means because of advertisement. Very clear? Now when it comes to inventories point of view, what, sir? Common sense, sir. If sales increases, automatically you need to do more production. If you want to do more production, you need more inventory. 114. 67 percentage. What about the 2011? 132.23 percentage. What about the what, sir? 38. Sir, sometimes your answer will be fluctuate, sir. One year it will be increase, one year it will be decrease, one year it will be increase. Are you clear? So always not came increasing values, sometimes all decreasing, sometimes combo. Now what about the EBT? 137.46 percentage. For 2010, 144.41 percentage, 165.55 percentage, 209.06. Clear? The computed percentage of sales, revenue, inventory, EBT reveals that this have been increasing throughout the. Are you agree? So if your answers are decreases, all answers are decreases, you have to write the word called entire study period, all values are decreases. If it's a fluctuating, you have to quote that word. The values are fluctuating. The values are fluctuating. The word fluctuating implies increase or decrease. Now, the above calculation shows that sales have increased by 94.68% and EBT has increased by 109% in the ultimate year of the study, whereas inventory have gone up by 73% in the last year of the study period. They are talking about the specific. Which year they will get a more sales, which year they will get their used more inventory, which year they will get a more EBT. So one of the last point they said specific. You can check the notes, sir. Which item are increasing faster than the others? Therefore, from the above analysis, we can say that through the inventory management of Rahul Limited was inefficient during the period under study, where the sales management is efficient to build up a good profitability position. So what does the mean for inefficient? Why they're using inefficient in the point of inventory? Compared to sales, inventory changes more. Comparing to sales, inventory changes more. Are you clear? If sale increased by 1% means I'm expecting only 1% change in the inventory. But sometimes what happening? If sale is changed by 1%, inventory change by more than 1%. It means you are wasting your raw materials. You are wasting your raw material. Why? Because raw material is a variable cost, na? Variable input, na? If one unit you need such you need some amount units of raw material. If you use that much, you will get a efficient. For one unit main 1 unit you have to use 5 kgs of raw material, but you are using 6 kgs. 1 kg wastage. Guys, clear? That kind of decisions also you can express based on the trend analysis, comparative statement analysis, common size statement analysis. Hope you guys you understand well these 3 topics: calculation point of view and comment point of view. Are you okay? So generally I can write every comment on my notes, sir, but writing of comment is not my cup of tea. Why? Because they will give a different values. Based on that, you have to write the comment. Are you clear? So that's why I said pattern, how to write the comment. Next. Our next concept, guys. How many concepts are completed? Yeah. Common statement is completed, comparative completed, trend analysis completed. Now the next concept is cash flow analysis. So I'm not discussing more about the cash flow analysis. Why? Because you have to learn in chapter 6 discounted cash flow method. Okay, just I will give a overview regarding the cash flow analysis. Don't write, I will give a notes. I will explain in overview manner for understanding purpose. So what's the next concept? Cash flow analysis. So they are not talking about any current assets other than the cash. They're only talk about only pure cash element analysis. But you can observe the above analysis. I consider interest, I consider sale, I consider depreciation, I consider all. I have followed accrual concept on comparative statement analysis, common size statement analysis, trend analysis. I done with all the values receivable, received, paid, payable. But when it comes to cash flow analysis, you have to focus only on. Are you clear, sir? Now don't write. So when it just understand and listen concept. So you have a clear picture of the concept. So first understand, then we can write the notes. When it comes to cash flow analysis, so you done you know the point. You have to consider only two things: received and paid. Yes or no, sir? Now the point is, um, this cash flow analysis we are not doing on the point of investment decision. Previous classes only I will explain investment decision. Investment decision is a part of the valuation. Now this cash flow analysis we are doing at valuation point of view. We are doing at, sir, where sir? Valuation point of view. Now when it comes to valuation point of view, we have a three elements in cash analysis. One is CFAT. Another one is FCFF. Another one is FCFE. Are you clear, sir? These three elements are very, very important. Calculation part I will show at chapter 6. Just understand meanings. Now I think you know this CFAT. Previous classes only we discussed in capital budgeting point of view. Here I am not talking about capital budgeting point of view. I am talking about a valuation point of view. Just understand. The word CFAT means cash in the hands of company before payment of capex, debenture holder settlement, equity shareholder settlement. Hope you understand. Cash in the hands of company before settlement of capex, any capital expenditure involved in your company. Second one, debenture holder settlement. Third one, equity shareholder settlement. Sir, what is the debenture shareholder settlement? Either interest or repayment of the capital. Both will be done. Here we are completed or not completed? Settlement. Before means not settlement. Three things are not settled as of now. What are the three things? Capital expenditure of the company, debenture holder settlement, equity shareholder settlement. That cash is known as CFAT. Are you clear, sir? Now, so why I using in valuation means in capital budgeting point of view, I used one assumption. Interest is irrelevant for capital budgeting decision. Interest is irrelevant for capital budgeting decision. Here I am not doing capital budgeting. Here I am doing valuation. And also I explained EBITDA. Sir, year one company, they started. They don't have a interest point. But when it comes to the existing company, they have two things: interest as well as depreciation. Guys, clear? So we are doing a valuation of existing company as well as new company. That's why we are not settling interest at the time of EBAD. We are not settling interest at the time of EBAD. We are settling interest at the time of CFAT. Clear? So CFAT means cash in the hands of a company for settlement of capital expenditure first, debenture holder settlement, equity shareholder settlement. Are you okay? Now okay, done. Now we reduced capex. You will get an answer name called FCFF. Out of CFAT, what you reduce it, sir? Capital expenditure. So now what the, if you have 100 lakh rupees, what's the meaning for that 100 lakhs? Cash in the hands of a company for settlement of debenture holder and capex completed. Debenture holder, equity shareholder. That's why it is known as free cash flows of firm. Free cash flows of firm. The word firm represent equity plus debt. Equity plus debt. Guys, clear? Now out of this 100 lakhs, I settled interest. That to be tax benefited interest. Interest 1 minus tax. minus minus repayment of debenture or a debt fund plus procurement of debt. If you adjust these three things for what cash, FCFF, you will get an outcome name called FCFE, free cash flows of equity firm. Free cash flows of equity firm. Guys, clear? Now you can share. Who? Owners can share that cash. Here we are not sharing profit. Here we are sharing what? Cash. You have to keep that point in your mind. Guys, clear? So CFAD is different, FCFF is different, FCFE is different. So this is the important calculation part, sir. Understanding purpose, I explained here. Just don't take that much of serious. We will discuss in chapter 6 in detailingly. Okay. Now just write down this. That is sufficient. So let us look this. Cash in the hands of a company before payment of capex, debenture holder and equity shareholder settlement. FCFF means free cash flows of firm. Here firm means equity plus debt. Now cash in the hands of company before settlement to debenture holder and equity shareholder. FCFE means free cash flows of equity firm. Cash in the hands of company before settlement to equity shareholder. Guys, clear? So why I use this E plus D and equity firm means, uh, if you're doing a valuation based on cash of levered firm, you have to use FCFF. Are you clear? If you're doing a valuation of firm based on cash, that too it is equity firm. At that time, don't use FCFF, use FCFE. Completed. So this is our last class in YouTube, sir. So we completed as my promise of 10 classes. Today onwards, next class onwards, these classes are not uploaded in YouTube. So don't waste your time. Please purchase classes in Shigara tutorials. So okay, so this is our MCQs and case study based module. So we are the prepared first in our south, sir. You can check these are the MCQs. In every chapter we added 100 plus 100 MCQs, near to 100, as well. So this is our case study. So this all case studies are taken from the e-bulletins, as well as in our material, as well as question papers, as well as MQPs. Very clear? So in end of the day, I will create few things based on the importance of the concept. Very clear? I understand the trend of the how they creating the case study based MCQ. Very clear? At least I will create 5 to 6 case studies based on your material. Are you okay? So that points are that 6 are not added in this material. I will give a PDF. Okay. Now so this case study asked in one attempt. There is nothing last before attempt. This is a case study asked in last attempt. Last but one attempt. So this not in this case study is not asked in exam, but this case study asked in MQP. Very clear, sir? So don't rely on any other material, including board material. Just to follow my material and my classes. That is sufficient for getting a 70 to 80 marks. Very clear? Okay, sir. Thank you. Bye.